Morning everyone, no hands, just for the randomers out there that think I hold the phone. I want to emphasise on placing less trades, okay? While some of us scalp, I myself, that's primarily my main strategy regarding the stock market. We don't neglect them opportunities, you know. Nasdaq at 13k, if you'd have bought that, you'd have doubled your money. You know, we don't get them opportunities all that often, especially last year. Okay, the market, or the S&P rallied 27%. When we are seeing this volatility because of news or interest rates or inflation or any other news out there, we need to capitalise on that. But equally, we need to be focusing on our day-to-day intraday swing trading, scalping, investing, whatever your chosen field is, and spending more time on the charts. Traders have got a bit of a bad rap because of the whole sort of Dubai lifestyle and Lamborghini this, and whilst that is, I think that's an amount of hate from the sort of professionals, you know, retail traders do get a bit of stick. I mean, I saw a chap the other day claiming that he was getting ready to trade on the beach, and then he walked away with a loss. Well, you know, that's not coincidental, is it? You know, you get what in, you get out what you put in. And if you are focused on managing the trade, managing the charts, and really taking your time, marking up your support and resistance, your order blocks, your support and resistance, you know, your trend lines, you stand a better chance of some success with patience and you know, not giving into the fear of missing out. If you're careful and you know, and this is why I suppose I do okay, because, you know, I do go to the gym. I've been going to the gym for many years. You know, I was doing the same businesses. I've done the same businesses. This is no different to me. This is because I know the size of my positions, and I know the potential profit and loss. So each trade that I place, it's very much calculated. Okay, sometimes I might jump in a little bit too early, but then I might let it breathe. I might let it hedge, certainly if we're selling off, and I find that I can cover my ass a little bit. It's not a get out of jail card, that. It's not a strategy that I emphasise with guys, but it is massively important. Certainly if you're understanding the market behaviour and the market trend and the market overall sort of structure and formation, you've got to take all this into consideration. And when you're learning, you'll learn all this over time. You'll understand the price action and where it's going and why it's going. So, you know, I always start off these videos and I always have a clear objective without just doing another video and another sort of rant. But I want you to be taking your time with entries, but managing the chart and understanding why. You know, is this a breakout and retest? Is this a major rejection, minor rejection, pivot point? Our own pivot points that we draw up, where we feel that the market's maybe rally for a couple of days, and we've seen last week or last month that there was huge buyers in there. We're cross-referencing that with news, and we're trying to speculate and use all the information out there possible to our advantage in terms of placing a trade. Okay, see the DAX pump this morning. A lot of people had just bought that dip and that had been well in. I was having a shower and getting ready for the morning, and I wasn't rushing. And I feel now that the less trades I place, my profits are slightly larger, as they were Friday. I had my missus have a laptop open when I was driving, And I could clearly see that the prices were behaving, or the price action was behaving in such a pattern, because I was there behind my screen. I know if you guys forget the European, I fallen out of love with that, to be honest. If you focus and are willing to spend all day behind your screen, okay, and waiting, maybe jumping in on an upward trend, or if there's some negativity, following the price action down, I don't see how you can go far wrong. When you're on your phone and you're jumping on it and you're taking the odd loss here, and you've took 5 losses and you know took 5 profits, it soon adds up, but them losses soon add up as well, and you're kind of guesstimating, or gambling as I call it. I don't think a lot of people are putting the time in that it deserves. They'll flick the phone up and they might place 5 trades in 5 days, or 5 trades in 1 day, and they've got 5 wins, and then they think they've mastered it. So it's a little harder than that, guys. Okay, I have travelled, and I do travel, and I am in the Maldives, and I am nicking a few quid, but sometimes I'm using my capital and liquidity in my favour. I'm seeing patterns. I won't just see one pattern and jump in. I'll think, okay, this may go here. I need it to retest here. I might buy here. On that pullback, I'll speculate, because I believe I'm at one with the trend, and various other sort of formations. And if I'm wrong, I cut it, because I know that even if I'm in profit, I might cut it and think, right, okay, well, I've had 1,500 quid there. That's 1% on my capital. I'm happy, because I know if I do that 10 times, it's 15 grand. Or for the likes of yourselves on a smaller account, it's 1,500 quid, and it's a lot of money. It really is a lot of money. And because I go to the gym, and I've done for 20 years now, it's slow and it's steady. And I had a mentor in the gym. He's still a good friend now, and it was slow going, and I understood that. And business at times can be slow going. Sometimes it can be fast and erratic. Still got me car and commercials, and between me and my pal, we might sell 20 vehicles in 1 month. Sometimes we might do 10, but sometimes the 10 are as much profit as the 20. And then this is where your trading comes in, when to be aggressive and not, when to be defensive and when to attack the market, knowing full well that when the Nasdaq reached 13k and I gave everyone a nod and a wink, I mean, look where it went to. I dollar cost averaged in there, so I didn't feel like I missed out. And that's one thing I've advocated to my team and on my YouTube, that have that long-term portfolio for your retirement fund or your passive income fund, whichever you decide how to run it. And then you don't feel like you're missing out. So you've got the high frequency, you've got your day trade money, you've got your fast money in a sense, but then you've also put a few quid in, even 20, 30, 40, 50 quid. I've just been to a wedding, and my nephews and whatnot, I've kind of helped them get set up with the whole dollar cost averaging thing, because we all spend 5-10 quid a day on coffee and a bit of lunch, whereas if we double that up and put some money in a longer term portfolio, I do believe I would be thanked in 20 years time. And if you didn't touch that with the power of compounding, we all know where it's likely to go should any dramas unfold, when you're a good way in. But anyway, that's another story for another day. So, we take it all into consideration, this day trading, and we can't just keep stabbing and looking at things and, a bit of news there. You've got to be at one with the market, as I say. And if you did less trades but managed the charts all day, I think you'd be in a better position, because I've got guys that like Dowry, he'll manage charts hours on end and possibly doesn't place a trade, but it's all going in here. He's understanding where the charts, why they're at the level that they're at, and where they're likely to go. And you know, we're at the market's beck and call, really. Wherever the market wants to go, the market will go. So we can do all our technicals, fundamental analysis, you know, cross-referencing this, all the million other things that are part of day trading, and we can get it wrong. There's a chap on YouTube, actually, an Asian chap, and he gives retail traders a bad name because he's saying, yeah, you're all flying around in your Lamborghini, and I was an institutional trader, you know, I was a banker, blah, 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 all your courses are BS. But you've just left an institutional banking job to set your own course up and sell it. So now are you a retail trader? So there's obviously there's huge upside potential with this, and there's obviously massive losses, and this is why you need to focus on essentially buying dips and shorting rallies. One of my mentors, he uses 2 million quid of his own money a day, and when I was sort of starting this journey, obviously the market crashed and I got in that bull run. He said to me, do a month of just buying, right? Whatever, forget that the market's high, yeah? Wait for it to pull back, because that'll teach you patience. I said, yeah, but if the market's high, I'll just short it. He said, no, wait for it to pull back and then buy the dip. And then that's what I did. Every time the market pulled back, I was buying them dips, and we're seeing higher highs and all-time highs in due course. And then he said, do a month of just selling. So if the market's super low, but we get a sort of dead cat bounce, or we get a fake upward signal or price action move, short it, because you need to be switching where the market's going. And that taught me how to buy and sell, when to buy and sell, and understood the market's overall trend and behavior and sentiment. Okay, we saw NASDAQ at 13k. The buyers came in, it held there, and then it obviously proceeded to somewhat recover. Are we at another pivot point right now? Possibly. Are we going to see 15k? Could do. If not, we sort of take it upon ourselves. Monday's a fresh day. Assess everything that's out there. See what the news is doing. Obviously, the Ukraine and Russia are hopefully at sort of peace talks or some sort of discussion, and we'll see how the market reacts. We assume we know roughly what the sentiment is, but then we're governed by, you know, your hedge funds, your banks, your institutional big money, smart money, and we've got to follow that ultimately. So you know, we do our homework extensively, and then we trade the market accordingly to what we see. We don't just randomly assume, I want to short the market, but it's pumping. Well, you know, forget what you want to do. You need to do what the market is doing. So yeah, just take your time, you know, it's a full-time job. You know, I know a lot of us aren't full-time. I'm 90%. So we have got an advantage, but you can set your alerts, you can set your order blocks should you wish. Obviously all your trades should have a stop loss, as well as they should have a take profit, even if you're scalping. So just spend more time on the charts, and I feel it'll paint a bigger picture. You know, we all want to press buy and sell. We can see how quick the profits and losses are, but ultimately we need to be spending that quality time on the charts, really. You know, more time on charts, less time trading. It's a bit like the gym. Go to the gym, 40-50 minutes is enough in the gym to sort of build some sort of physique, but it's your diet, it's your lifestyle, and that's what trading is. You know, pressing a few buttons is easy. That's, you know, you're attacking the market, and you know, we know what we want to be doing, which is profiting. But then ultimately we need to be seeing, right, well, you know, this hour's taken hold. You know, okay, the market's pumped this hour on market open. Where does it want to go? Does it want to continue? Does it want to pull back? Has it reached a certain level? Has it reached a certain zone? And so on and so forth. And I just wish people would spend more time on the charts and understanding why the price action is going, where it is, and cross-referencing it with all the news and everything else out there. So I hope that's helped, and yeah, let me know your thoughts.
Now, if you know what you're worth, now go out and get what you're worth. But you gotta be willing to take the hits and not pointing fingers saying you ain't where you want to be because of him or her or anybody. Cowards do that, and that ain't you. You're better than